Okay, so you sent over quite a stack of documents on IHCL this time.
Yeah.
A press release, an analyst presentation, and even some real deal financial statements.
The whole shebang.
Yeah, so we're going to deep dive into the world of Indian hospitality with IHCL.
Sounds good.
Luxury hotels, amazing food, and some really impressive growth.
They've been killing it.
So for anyone out there who might not be familiar, IHCL is basically the top dog in the Indian hospitality scene.
Yeah, that's a good way to put it.
They're the powerhouse behind those big name brands,
Yeah.
like Taj Solocutions, Vivanta, even those ginger hotels that are a bit easier on the wallet.
Right. Huge footprint, not just in India, but globally, too.
Exactly. So our mission today is to figure out how exactly IHCL performed in Q3 of fiscal year 2025.
Sounds like a plan.
What's fueling their success, and what might the future hold for this hospitality giant?
All right, let's dive in.
First things first, that press release makes it pretty clear IHCL just hit their 11th consecutive quarter of record-breaking performance.
Wow, 11? That's impressive.
Yeah, they're not just growing, they're on a serious roll.
So what kind of numbers are we talking about?
We're talking 29% revenue growth year over year, a 32% jump in EBITDA, and a 29% rise in PAT.
Those are some serious gains.
Now, I know some people might be hearing EBITDA and PAT and thinking, hold on, what's all that about?
Yeah, happy to break it down.
EBITDA, or earnings before interest, taxes, depreciation, and amortization, basically shows us how much profit they're making from their core business operations before we factor in things like debt and taxes.
Right, it's a good way to compare their performance to other hotel companies.
And PAT, on the other hand, is profit after tax,
The bottom line.
the money they get to keep after everything's paid out.
Exactly.
So 11 quarters of record profits, that's got to be impressive in any industry.
Oh, absolutely, especially in a fast-paced world like hospitality.
So what's their secret sauce?
Well, the analyst presentation gives us some clues.
Okay, fill us in.
It points out that in India right now, the demand for hotel rooms is actually outpacing the supply.
Oh, that's interesting.
So think about what that means for IHCL. They're in a really good spot.
So when demand is higher than supply, they have more power to set prices.
Exactly. And that can lead to higher revenue and even bigger profits. That presentation even breaks down the expected supply growth in some of India's biggest cities like Mumbai, Bengaluru, and Delhi.
Oh, wow. Let me guess. Mumbai is probably going to be a tight squeeze.
Yeah, Mumbai is only expected to see a tiny 2% increase in room supply in 2025.
Wow. That's like trying to find a parking spot in a completely packed lot.
Yeah, if you've got a spot, you're in high demand.
It seems like everyone's traveling these days. Every time I turn on the news, it's another story about India's booming travel sector.
It makes sense. India's economy is growing, more people have disposable income, and the government has been putting a lot of effort into improving tourism infrastructure.
Right. And there's also this renewed interest in exploring India itself.
Yeah, discovering all those amazing destinations right in their own backyard.
And IHCL is right in the middle of all of this, riding that wave.
Absolutely. But they're not just sitting back and enjoying the ride. They're being strategic about it.
Okay, tell me more about that.
They're focusing on what they call a capital light model for expansion.
Capital light. So what does that actually mean?
Essentially, instead of owning every single hotel, they're partnering up, signing management contracts and franchises.
Oh, I see. So the presentation highlights that a whopping 85% of their 55 hotel signings in the first 9 months of FY25 were done this way.
That's right.
So why is that such a big deal?
It allows IHCL to grow really quickly without having to spend huge amounts of cash to buy properties.
But are there any downsides to this capital light approach?
That's a good question. What do you think?
I mean, it's kind of like renting out your car instead of selling it.
Okay, I see where you're going with this.
You still get that income rolling in, but you don't have to worry about maintenance or repairs.
Right. But you don't own the asset.
Exactly. So it's a trade-off.
Definitely.
So they're nailing it with their traditional hotels, but that's not the whole story.
No, they're branching out.
Both the press release and the presentation show that IHCL is exploring new territory beyond just hotels.
Right, and seeing some serious growth in these new businesses.
Like what?
Like the Ginger brand, their Salomon Stays and Trails, and even Q-Min, their foray into the food scene.
Okay, let's break those down one by one.
Sure.
Ginger first. So what's happening there?
Their revenue is up a whopping 45%.
Wow, 45%. That's huge.
And they're not just sticking to big cities either.
Okay, tell me about Amana Stays and Trails then.
They offer these unique, off-the-beaten-path experiences in some stunning locations, and their portfolio has now hit 250 bungalows.
Talk about getting away from it all.
And then there's Cumin stepping out of those hotel kitchens and into the world.
Expanding their reach through strategic partnerships.
Exactly. Imagine bringing that signature IHCL culinary magic right to your doorstep.
So it's fascinating to see how they're diversifying.
Absolutely.
Out of all these new ventures, which one piques your interest the most and why?
You know, I'm always drawn to businesses that are trying to do good while also doing well.
Makes sense.
And that's why IHCL's commitment to sustainability really stands out to me.
They're not just talking about it, they're actually walking the walk.
Exactly. They've got this detailed plan called the PASSIA Framework, outlining their dedication to environmental and social responsibility.
And they're already achieving some impressive results.
Accurate.
Well, they've already reached 37% renewable energy usage across their operations, which is no easy feat for a company of their size.
That's true.
We're also seeing them taking concrete steps with things like EV charging stations.
How many have they got now?
A whopping 336 of them.
Wow, that's a lot.
And they're actively working towards eliminating single-use plastics across their hotels.
It's refreshing to see a company this big taking these issues seriously.
Absolutely. So they made a couple of big power moves as well, which are highlighted in the materials.
Right, the acquisition of the Claridges in New Delhi and the consolidation of Tree of Life.
Tree of Life was that company focused on unique and immersive travel experiences, right?
Yeah, they brought them right into IHCL.
These are some bold moves.
They definitely tell us a lot about their strategy.
It seems like they're doubling down on the luxury and experiential travel segments.
Making sure they have a strong presence across different parts of the market.
Okay, so we've painted a pretty broad picture of IHCL's performance so far, but to really get into the details,
We need to look at those financial statements.
yeah, we're going to have to roll up our sleeves and dive into those numbers.
They'll tell us the real story.
Ready to crunch some numbers.
Let's do it.
Okay, so we'll start with the consolidated statement of financial results.
This is where the magic happens.
It shows us exactly how much revenue each part of their business is bringing in.
Right. And remember, IHCL doesn't operate everything directly.
They've got a bunch of subsidiaries.
Separate companies under their umbrella.
So this consolidated statement combines the performance of all those entities.
Gives us a complete view of the IHCL empire.
Okay, so looking at the revenue breakdown for Q3, it's pretty clear that their traditional hotel segment is still the powerhouse.
The bread and butter.
It brought in a hefty euro 2,316 crores,
Which is a
16% increase compared to the same quarter last year.
proof that those favorable demand-supply dynamics we talked about are really working for them.
But those new businesses we were talking about, Ginger, Ama, and Cumin,
Yeah,
they're not just side projects, they're pulling their weight too,
absolutely.
bringing in a combined revenue of 164 crores,
And that 40% year-on-year growth tells you those ventures are really catching fire.
adding fuel to that IHCL engine.
For sure.
Now, there's one more piece of the revenue puzzle. We need to talk about their air and institutional catering business.
Oh, right. That used to be a joint venture called Taja Sets.
But now it's fully consolidated into IHCL.
So we're seeing the full picture of their performance.
And in Q3, this segment brought in a respectable 275 crores in revenue.
An 18% increase compared to the previous year.
So we've got all these different revenue streams, and each one is growing at a pretty impressive rate.
It's looking good so far.
But remember, revenue is just one side of the coin.
Right. To understand how profitable they really are, we need to look at their EBITDA.
That figure we discussed earlier.
It gives us a clearer picture of their operational efficiency, how well they're turning revenue into actual profit.
So what's the verdict on their EBITDA?
Well, in Q3, their consolidated EBITDA reached 1,020 crores.
1,020 crores, that's massive.
It's a 32% jump compared to the same period last year.
And if we look at their EBITDA margin, that's their EBITDA as a percentage of revenue.
Right.
It's expanded by 0.8 percentage points to 39.4%.
They're not just making more money, they're becoming more efficient at doing it.
It's like they're streamlining their operations, maybe negotiating better deals with suppliers or finding creative ways to reduce overhead costs.
Whatever they're doing, it seems to be working.
But we can't forget about the bottom line.
The profit after tax, the PA.
It's the final number that tells us how much profit they actually get to keep after all the expenses and taxes are paid.
Right, the real measure of success.
And for IHCL in Q3, that PAT number landed at a cool 582 crores.
A healthy 29% increase year over year.
So the takeaway here, those diverse revenue streams, that impressive EBITDA growth, and their focus on efficiency have all contributed to a significant boost in their profitability.
Everything's looking pretty rosy so far.
But we've been focusing on the big picture, the consolidated view of the entire IHCL operation.
Right, what about the core company itself?
The Indian Hotels Co Ltd leaving out those subsidiaries.
Ah, that's where the standalone financial statement comes in.
What's the story there? Are they holding their own even without those subsidiaries?
Let's find out.
Their standalone revenue for Q3 clocked in at 1,517 crores.
A 15% increase compared to last year.
Not bad at all.
No.
And their standalone EBITDA.
That came in at 725 crores, a 21% jump.
Wow. And finally, their standalone PAC for Q3?
It reached 469 crores, a solid 23% increase year over year.
So even when we strip away the contributions of those subsidiaries, IHCL is still showing impressive growth and profitability.
Their core business is strong.
They're definitely making the most of that booming Indian travel market. But you know what's really fascinating about these financial statements is that they reveal some interesting details about how IHCL operates.
Oh yeah, like what?
Did you notice that their payroll costs as a percentage of their operating revenue actually decreased?
That's a good sign.
It suggests that they're managing their labor costs pretty efficiently.
Even with potential wage increases happening across the industry.
And it's not just payroll. Their power costs as a percentage of operating revenue also went down.
Could that be a hint that they're becoming more energy efficient?
Maybe aligning with those sustainability initiatives they're so proud of.
It's like they're finding ways to be more profitable and more sustainable at the same time.
Which is a win-win for everyone.
Absolutely.
But they're also making some strategic investments.
Oh yeah, how so?
Their balance sheet shows some significant investments in other companies. 688 crores invested in associate companies and a hefty euro 3,707 crores in joint ventures.
Those are big numbers.
These investments are a testament to their collaborative approach.
Forging those strategic partnerships that play such a crucial role in their growth strategy.
Okay, so we've covered a lot of ground here. We've seen how IHCL's impressive financial performance, their smart expansion strategy, and that diverse portfolio of brands and businesses have made them a leader in the Indian hospitality industry.
Impressive picture.
But it's clear they're not content with just resting on their laurels.
Right. They're always looking for ways to improve.
Constantly adapting, innovating, and pushing the boundaries of what's possible in this world of hospitality.
They're not afraid to shake things up.
And that's what makes this deep dive so exciting.
Agreed.
We're not just looking at past performance, we're getting a glimpse into their vision for the future.
It's about understanding where they're headed.
Speaking of the future, I'm curious to dig deeper into those expansion plans. We saw those impressive signing numbers, but what does their actual pipeline of hotels look like?
Yeah, where are they setting their sights?
Let's unpack that next.
Sounds good to me.
They've got a pretty ambitious roadmap ahead.
A mix of owned, managed, and franchised properties across all their different brands.
Looks like we've got a lot more to explore.
Definitely.
Ready to continue our deep dive into the world of IHCL.
Absolutely. Let's keep going.
So it seems like IHCL isn't just dipping their toes into expansion, they're diving right in.
Yeah, that analyst presentation really lays out their ambitions.
That pipeline of upcoming projects is pretty impressive just looking at the Taj brand alone.
Oh yeah, the Taj.
We're talking 712 hotels in the pipeline, and remember, Taj is their luxury line.
Right, the one that aims to wow even the most discerning traveler.
So what does that tell you about IHCL's outlook on the luxury travel market?
Well, they must be pretty confident that demand for those high-end experiences is only going to keep growing, both within India and internationally.
Makes sense, and they're not neglecting their other brands either.
No, they're not.
Vivanta, their more upscale brand, has 127 hotels waiting in the wings.
And Selections, their collection of unique experiential hotels, is at a staggering 4,406.
Wow, 1,406, that's a lot.
And let's not forget about Ginger, their answer to stylish yet affordable accommodation.
Right. They're adding a whopping 2,725 hotels to their portfolio.
It's clear they're aiming for a strong presence across the board, catering to every type of traveler and budget.
They're really trying to cover all their bases.
And it's not just about quantity, it's about strategy.
How so?
They're using a mix of ownership models.
Okay, so some hotels will be owned outright by IHCL, while others will be managed or franchised.
Exactly.
That's a clever approach, isn't it?
Oh, definitely. It allows them to spread out their risk and tap into different opportunities.
So owning a hotel gives them more control, sure.
But it also requires a big upfront investment.
Right, whereas managing or franchising a hotel allows them to expand much faster without tying up as much capital.
Exactly.
Speaking of strategic moves, remember those acquisitions we talked about?
The Claridge's New Delhi and Tree of Life.
Yeah, those were big headlines.
Especially snapping up the Claridge's.
Yeah.
That's an iconic property in Delhi. A real statement about their ambitions in the luxury segment.
And bringing Tree of Life into the fold shows their commitment to immersive experiential travel,
Something that's becoming increasingly popular.
especially for those seeking authentic, off-the-beaten-path adventures.
Absolutely.
So we've established that IHCL has a pretty robust and well-thought-out expansion plan, but let's get specific.
Okay.
Where exactly are they expanding?
Are there any particular regions or cities they're focusing on?
Well, the presentation breaks it down quite nicely, actually.
Oh, good.
Looking at their pipeline for the next few fiscal years, a lot of new hotels are slated to open in Q4 of FY25 itself.
So in the near future.
But here's what I find interesting. They're not just sticking to major metropolitan areas.
Also, where are they going?
They're venturing into new territories, places like Purikoch and Thimphu, even Bandhavgarh.
It seems like they're trying to anticipate the next wave of travel trends.
Getting ahead of the curve and tapping into that growing demand for experiences beyond the usual tourist hotspots.
It's about more than just adding dots to their map.
Right, they're trying to create a whole ecosystem of brands and experiences.
It's something for everyone.
And that's where their diverse range of brands comes into play.
Each brand caters to a different type of traveler, a different need, a different aspiration.
The presentation includes a snapshot of their brand landscape as of December 31st, 2024.
Gives us a good overview of where they stand.
Let's break it down, starting with Taj. They currently have 87 operational hotels with 13,084 rooms.
Okay.
And their pipeline boasts an additional 38 hotels, adding another 6,786 rooms to their luxury portfolio.
That's a substantial increase.
And Vivant is not far behind. They're currently at 28 operational hotels with another 21 in development.
So they're growing steadily.
Selectations sits at 25 operational hotels with 13 more in the pipeline.
Okay.
And then there's Ginger leading the pack with 72 operational hotels and an impressive 30 under development.
They're going all in on that lean luxe segment.
Targeting travelers who want style and comfort without breaking the bank. And they're even dipping their toes into new waters with brands like Gateway and, of course, Tree of Life.
So they're experimenting with new concepts.
It's pretty remarkable how they're managing this diverse portfolio of brands, each with its own unique personality and target market.
Yeah, it makes you wonder how they maintain consistency and quality across the board.
Well, remember, they're focused on guest satisfaction.
Right, they've set a target NPS score of 70 plus.
Which suggests they're serious about delivering excellent experiences, regardless of which brand you choose.
That's a high bar to set, especially when you're expanding this rapidly and managing so many different brands.
And let's be honest, expanding into new markets and juggling all these different brands comes with its fair share of challenges.
Yeah, for sure.
How is IHCL tackling these hurdles? Do you think they're equipped to handle the complexities of such rapid growth?
That's a great question. They've got a few key initiatives in place, starting with their commitment to sustainability. That Pathia framework we talked about earlier.
Right.
They're not just paying lip service to sustainability, they're taking concrete steps.
And remember, sustainability isn't just about the environment, it's about social and economic responsibility as well.
Exactly. IHCL's Pathia framework actually addresses all three of these pillars.
So they've set some ambitious goals for 2030, including eliminating single-use plastic, entirely achieving 100% water recycling, and sourcing half their energy from renewable sources.
Those are some lofty goals.
And they're not just setting goals, they're actually making progress.
So we've already touched on their achievements with renewable energy and EV charging stations.
Right. They've also installed 61 bottling plants across their properties to cut down on plastic waste.
Oh, wow. I didn't know that.
And they've implemented organic waste management systems.
It's encouraging to see them taking such concrete steps to minimize their environmental impact, especially for a company operating at their scale.
But sustainability is just one piece of the puzzle. They're also investing heavily in technology and digital initiatives.
Which is crucial in today's world.
They're using technology to enhance the guest experience, streamline their operations, and boost revenue growth.
It's about staying ahead of the curve.
Take their loyalty program, Taj Inner Circle, for example.
Oh, yeah, that's a good one.
It's consistently ranked as one of the best in the industry.
And they've cleverly integrated it with the Tata New Super app.
So now guests can earn and redeem points across a whole range of Tata brands.
It's a win-win for everyone involved.
It's a smart move. It taps into that growing Tata ecosystem.
Creating a more rewarding experience for loyal customers and opening up new avenues for collaboration.
And they're also harnessing the power of data analytics.
By understanding guest preferences and behavior, they can personalize their offerings and create more targeted marketing campaigns.
It's clear they see technology as a key driver of growth and innovation, not just a way to improve efficiency.
Absolutely.
Speaking of innovation, let's not forget about their new and reimagined businesses.
Right. They're really pushing the boundaries of what's possible in the hospitality industry.
We've already talked about Ama Stays and Trails, their answer to the growing demand for experiential travel.
Right. But they're exploring other avenues as well.
Like what?
Take Yumin, their food delivery platform, for example.
Oh, yeah, I came in.
It started as a way to bring those delicious IHCL culinary experiences to people's homes during the pandemic.
But now it's blossoming into a standalone business with huge potential.
They're not limiting themselves to food delivery either.
What else are they doing?
They've also launched Cumin Shop, offering a curated selection of gourmet products and hampers.
It's a great way to extend their brand beyond the hotel walls.
They're really smart about leveraging their existing strengths, their culinary expertise in this case, to create new revenue streams and reach new audiences.
But innovation isn't just about creating something entirely new.
No, it's also about reimagining what already exists, breathing new life into it.
That's what they've done with their Chambers program.
Oh, yeah.
It's their exclusive business club offering a curated network of professionals and a whole host of privileges across all IHCL hotels.
Right? I've heard good things about it.
They recently revamped the program, offering even more value to members.
So how's it performing?
And it's clearly working. Their Chambers revenue is up 18% year on year.
Wow, that's impressive.
It shows you they're in tune with the market and willing to adapt to stay ahead of the game.
Absolutely.
So to sum it up, we've got sustainability initiatives, investments in technology, new businesses, and even revamped existing concepts.
They're not just building hotels, they're building a whole hospitality ecosystem.
And it all stems from a very clear vision.
To be the most valued, responsible, and profitable hospitality ecosystem out there.
Every initiative, every strategy, every decision seems to flow from that vision.
They've got the vision, the strategy, and the execution.
But what about the bottom line? How are all these initiatives translating into cold, hard numbers?
We've seen those impressive revenue and profitability figures.
But let's break it down further and see what's driving those results.
Okay.
The analyst presentation has a helpful chart showing how each business segment contributes to their overall revenue.
Let's take a look.